What are your concerns around the debt going into Bitcoin?
Quite high. Um, the gold, what killed the gold standard was the debt. So, 1944, Bretton Woods, they introduced the gold standard, and the International Monetary Fund and the Federal Reserve. Then 27 years later, 15th of August 1971, it died because during the 50s and 60s, America were forced to print more dollars than they had gold. Other governments that had deposited their gold in the US Fort Knox realized that was happening, wanted their gold back, created a bank run on Fort Knox. Richard Nixon saw that happening. He had no choice. So people blame Richard Nixon, but it actually started, in the 50s in the space race and the arms race and the nuclear race with Russia. And just, to stop the depletion. And they didn't have enough gold to supply back to the foreign states when they wanted to exchange them back for the dollars that they held that were becoming increasingly worthless. And just that bank run on Fort Knox was because of the debt that was low. But gold was not supposed to have debt. It was supposed to be a hard asset back, and it was supposed to be a hard asset backed by dollars. But it was by overprinting the dollars, you suddenly diluted it and put debt on it. And if we continue to do that so we're doing that with Bitcoin. Michael Saylor, MicroStrategies, has found what we in the Bitcoin community call an infinite money printer, which is he can borrow unsecured debt at almost unlimited amounts, buy Bitcoin, and then sell shares in his company. Now, personally, it's been unbelievably successful. He's turned his $1 billion failing company into a very successful $50 billion company, but he's done it through debt. And if, as the US start buying their Bitcoin, they want to get from 200,000 to a million Bitcoin, they're doing that they want to pay off their $36 trillion debt. So, there's 200, there's about 150, $200 trillion of money. There's $454 trillion of wealth on the planet, but there's $315 trillion of debt. And if we include debt in the money supply, then you nearly double the demands on Bitcoin, and it becomes unsecured. And we could end up. So we haven't yet got to the Bitcoin standard. That I think that will happen in the next 5 to 10 years. It will actually become adopted as a gold standard and become stabilized. And the gold standard lasted 25, 27 years because of the debt that was loaded onto it. If the debt is loaded onto, if we continue loading debt onto Bitcoin, which is quite likely, I'm not certain Bitcoin will survive. No, when I say it survived, gold still survives, it's thriving, but if gold matched the money supply, it should not be worth 20 trillion, it should be worth 200 trillion. So gold is about a tenth the price it should be because it's no longer the gold standard. And that could happen to Bitcoin. Bitcoin should match the money supply as a standard. But if we load debt onto it, we may be forced to come off the Bitcoin standard when it gets adopted, and it will become the next gold. Still fine, gold. There's still gold maxes out there, and gold relative to fiat, to government money, is doing very well, but not gold is not doing as well as it should have been doing if it had remained as a standard.
Yeah, gold is barely keeping up with the inflation. But don't you think that the fact that we can actually hold Bitcoin, and if Michael Saylor puts that, it gets the credit and buys Bitcoin, he's only risking his own company, and if he has to sell Bitcoin, he has a huge load of Bitcoin, and the price goes down, and the people who have appreciated it and are not custodian it with Coinbase will buy it, and then we will prosper. And the gold could not be transported and be used as money by every citizen, though Bitcoin can be. Don't you think that these things are the things that can maybe, or I would say for sure, in case something happens to MicroStrategy, the price would highly be impacted, but the
Mm-hmm.
integrity of Bitcoin will not be. What's your thoughts around that?
So I wrote an article about this, and I see Michael Saylor and micro strategies as almost like the alpha test. So that's the alpha release of loading debt onto Bitcoin. The beta test is going to be the US Strategic Bitcoin Reserve. So strategy's got 500,000 Bitcoin. The US is going to put 1 million. If the US is successful, other countries will match that and load Bitcoin to pay off their debt. So Saylor's the alpha test. The US Strategic Reserve is the beta test of debt, and the full release will be if we load the 315 trillion of debt that the world has and try to pay that off with Bitcoin. And so, yeah, I totally agree. If strategy fails and he sells off his Bitcoin, the price will dip a bit, but it'll be absorbed and it's not a big thing. Even the US at 1 million, again, if that fails, it will sell off and the price will dip. We'll all buy the dip and we'll get even richer. That's all great. But so alpha and beta test you can get away with. The full blown, do we really want to load $315 trillion of debt with Bitcoin? And I don't know that we do. I'm not, that doesn't sound good to me. That's how gold failed. But that said, we're talking 5 to 10 years for Bitcoin standard to come in until we get to the Bitcoin standard. And gold took 25, 27 years to fail. So we're talking at least that. So we're talking 30, 35 years of a life cycle playing out. That's fine for me. You might still be around, but you'll still be okay. But we're talking like 30 plus years is a projected timeline of this. We're not talking next year or the next 5 years. So this is a very, very long time concern.